Welcome to today's update, and a very warm welcome to all of our viewers tuning in from across the United Kingdom. If you are a pensioner approaching state pension age or helping a relative navigate their retirement finances, August 2026 brings a series of essential updates, crucial dates, and important financial considerations that you simply cannot afford to miss. The financial landscape for older adults in Britain is shifting rapidly, with significant developments regarding Department for Work and Pensions payment schedules, tax threshold impacts, means-tested benefit cut-offs, and ongoing updates regarding state support. In this video, we are going to walk through everything happening this month, explaining exactly what these changes mean for your weekly income, your household budget, and your planning for the months ahead. If you find these updates valuable, please hit the like button right now, subscribe to the channel, and turn on the notification bell so you never miss an important update. But before we begin, I would like to remind you that many pensioners could be eligible for a new extra support payment of £200. If you have not heard about this yet, I have left detailed information from an official source in the comments below the video. Make sure to check it out. And now, let us move on to the topic of today's video. First and foremost, let us focus on a vital operational change that directly impacts millions of bank accounts across England, Wales, Scotland, and Northern Ireland during the month of August 2026. That is the upcoming summer bank holiday payment date adjustment. For pensioners living in England, Wales, and Northern Ireland, Monday the 31st of August 2026 is an official statutory bank holiday. Because the Department for Work and Pensions, Revenue and Customs, and high street banking institutions do not process standard payments on public holidays, any benefit or pension payment that was originally scheduled to reach your bank account on Monday the 31st of August will automatically be brought forward. This means if your state pension, pension credit, attendance allowance, disability living allowance, or personal independence payment is due on the final Monday of August, you will instead receive your money early on Friday the 28th of August 2026. Receiving your money early is always a welcome scenario, but it requires careful financial budgeting. Because your payment arrives 3 days earlier than expected, the gap between this August payment and your subsequent payment in September will be slightly longer than usual. It is wise to plan your household expenses, direct debits, and grocery shopping around this altered schedule so that you are not caught off guard during the first week of September. For our viewers in Scotland, please keep in mind that the August bank holiday falls earlier in the month, on Monday the 3rd of August 2026. Consequently, Scottish benefit payments due on that specific date were adjusted to Friday the 31st of July. However, DWP payments administered on a UK-wide basis will follow the standard late August schedule, so double-checking your remittance slip or online bank account is always recommended. If, for any reason, your payment does not land in your account on Friday the 28th of August, as expected, you should check your bank statement first to ensure it is not listed as a pending transaction, before reaching out directly to the relevant DWP helpline. Now, here is where things get really interesting for your long-term wallet. Beyond the immediate bank holiday adjustment, August 2026 serves as a pivotal mid-year checkpoint for understanding how the full force of the 2026 to 2027 financial year pension rates is bedding in. Following the implementation of the spring uprating under the government's triple lock policy, state pensions saw an increase of 4.8%, reflecting the growth in average weekly earnings. For those receiving the full new state pension, applicable to individuals who reached state pension age on or after the 6th of April 2016, the weekly payment stands at £241.30. Over the course of a full tax year, this brings the total new state pension to £12,547.60. For those on the older basic state pension, individuals who reached state pension age prior to April 2016, the full rate currently sits at £184.90 per week, which amounts to £9,614.80 annually. While these increases were designed to help protect purchasing power against inflation, they have triggered a very significant secondary effect that is becoming increasingly clear to pensioners this August. That issue is the ongoing freeze on income tax personal allowances. The standard tax-free personal allowance in the United Kingdom remains frozen at £12,570. When you compare the annual full new state pension of £12,547.60 to that £12,570 threshold, you immediately see how paper-thin the margin has become. The difference between the full new state pension and the point at which you begin paying income tax is now just £22.40 for the entire year. This phenomenon, known as fiscal drag, means that any pensioner receiving even a tiny amount of additional income, whether from a small private pension, a workplace pension, occupational benefits, interest on savings, or a part-time job, will automatically cross the threshold into paying basic rate income tax at 20%. During August and heading into the autumn months, HM Revenue and Customs routinely issues simple assessment tax calculations and tax code adjustments to individuals whose income exceeds the allowance. If you receive a letter from HMRC stating that you owe tax on your pension income, do not panic, but do read the document carefully. In many cases, HMRC collects this tax directly by adjusting the tax code applied to your private or workplace pension provider. If you only receive the state pension and have no private pension from which tax can be deducted, HMRC may send you a demand asking for payment under simple assessment. You might be wondering how you can cushion your household budget against these rising tax pressures, and that brings us to one of the most critical topics for August 2026, the vital necessity of checking your eligibility for pension credit. Pension credit is a tax-free means-tested benefit administered by the Department for Work and Pensions, designed to top up weekly income for retired individuals living on modest means. Following the recent uprating, pension credit guarantees a minimum weekly income of £238 for single pensioners and £363.25 for couples. If your total weekly income falls below these amounts, you could be entitled to a top-up payment that brings you up to the statutory minimum. However, the financial value of pension credit goes far beyond the direct cash payment you receive each week. It acts as a golden key that unlocks a massive gateway of secondary financial support that can save you thousands of pounds every single year. August is absolute prime time to submit a claim for pension credit, and there is a very specific seasonal reason for this. As autumn approaches, eligibility for winter financial support packages will be determined based on benefit entitlement during specified qualifying weeks. Under current regulations, the winter fuel payment, which provides crucial financial aid toward heating bills during the coldest months, is strictly targeted toward households receiving income-related benefits, principally pension credit. If you are eligible for pension credit in August and make a successful claim, you automatically safeguard your entitlement to the winter fuel payment when winter arrives. What makes pension credit even more advantageous is that backdating rules allow successful claims to be backdated by up to 3 months, provided you met the eligibility criteria throughout that period. Submitting an application in August ensures that your coverage bridges the entire summer and positions you perfectly for autumn verification. In addition to securing the winter fuel payment, being awarded pension credit opens up an impressive array of further savings. If you are aged 75 or over and receive pension credit, you are entitled to a free TV license, saving you £169.50 annually. Pension credit recipients can also qualify for substantial reductions on their council tax bills, which in some local authority areas can amount to a full 100% discount. Furthermore, claiming pension credit makes you eligible for the Warm Home Discount Scheme, which provides a one-off rebate on your electricity bill during the winter, alongside potential help with NHS dental care, free eye tests, voucher assistance for glasses, and cold weather payments during periods of severe freezing weather. Despite these remarkable benefits, official government estimates indicate that roughly 800,000 eligible households across Great Britain are currently failing to claim pension credit. Many pensioners mistakenly assume that owning their own home, having a small amount of savings, or receiving a modest private pension disqualifies them. In reality, you can still qualify for pension credit even if you own your house, and the first £10,000 of your savings are completely ignored in the calculation. If you have more than £10,000 in savings, you may still be eligible, as the DWP simply calculates a deemed income for amounts above that threshold. Checking your eligibility takes only a few minutes online via the official government pension credit calculator or by calling the free DWP pension credit claim line. Building smoothly on from income support, another vital area that demands close attention this August involves disability and care benefits, specifically attendance allowance, personal independence payment, and carers allowance. Attendance allowance is a non-means tested, tax-free benefit paid to individuals who have reached state pension age and require help with personal care or supervision due to a physical or mental disability, long-term illness, or health condition. Crucially, attendance allowance does not look at your income or savings, nor does it require you to have an active carer in place. It is purely based on the level of support you need throughout the day or night. The lower rate of attendance allowance currently stands at £76.70 per week, intended for those who require frequent help or constant supervision during either the day or the night. The higher rate is £114.60 per week, awarded to individuals who need help or supervision throughout both day and night, or who are terminally ill. If you find that your health conditions have worsened over recent months and your daily living activities have become more challenging, August is an excellent time to request a review or initiate a new claim. An award of attendance allowance can also increase your underlying entitlement to other benefits like pension credit by triggering additional disability premiums. For pensioners who are caring for a spouse, partner, relative or friend, carers allowance, or the carer element within pension support frameworks, provides vital recognition. The weekly rate for carers allowance is £81.50. However, carers should pay close attention to the net earnings cap, which dictates how much you can earn from paid work while still retaining your allowance. The DWP has increased its compliance scrutiny in recent times, monitoring earnings records closely. If you are working while caring, ensure that allowable expenses, such as pension contributions or care costs, are properly deducted from your gross pay calculation to avoid inadvertent overpayments. While keeping track of weekly benefits is essential, we must also address ongoing structural developments and policy discussions that affect millions of retirees, particularly women born in the 1950s, often referred to as the WASPI campaign, Women Against State Pension Inequality. The Parliamentary and Health Service Ombudsman issued significant findings regarding historical failure in DWP communication when the state pension age for women was aligned with men from 60 to 66. Throughout 2026, campaign groups and lawmakers have continued to debate potential compensation schemes and formal government responses. While no automatic compensation payouts have been finalized or open for distribution as of August 2026, staying informed through verified news outlets and official government announcements is essential. Be extraordinarily cautious of online scams or fraudulent messages claiming that you can submit an immediate financial claim for WASPI compensation in exchange for personal details or fee payments. Legitimate government updates will always be free and published through official public channels. This danger of deceptive claims brings us directly to a critical safety warning for the current season. Financial vigilance is particularly important during the summer months, when scam activity frequently spikes. Phishing text messages and fraudulent emails purporting to be from HMRC, the DWP, or energy suppliers often circulate, claiming that you need to update your payment details or click a link to claim an urgent cost of living allowance or rebate. Please remember that the Department for Work and Pensions and HMRC will never ask you to reveal personal banking details, passwords, or PIN numbers over a text message or via an unverified web link. If you receive a suspicious message, report it, delete it, and never click on unverified links. To tie all these crucial threads together, let us review a simple checklist of practical actions you can take today to ensure your retirement finances are fully optimized and secure. First, check your bank account calendar for Friday the 28th of August if you are due a DWP payment on the 31st. Second, head over to the official government portal to check your state pension forecast and review your national insurance record. If you have gaps in your national insurance record from previous years, you may have the opportunity to pay voluntary contributions to boost your future state pension payout. Third, if your weekly income is under £238 as a single person or £363 as a couple, take immediate action to apply for pension credit. Fourth, review your health and care needs to see if attendance allowance could provide well-deserved financial support. Taking these proactive steps during August puts you in the strongest possible position to manage your living expenses, secure winter allowances, and protect your hard-earned money. Navigating state benefits and retirement rules can feel complicated, but staying informed gives you total confidence and peace of mind. Thank you so much for watching today's update. If you found this guidance clear, informative, and helpful, please take a quick moment to hit the like button below this video. Don't forget to subscribe to our channel and turn on the notification bell so that you never miss out on crucial pension updates, benefit news, and practical financial advice tailored specifically for UK pensioners. Your support means the world to us and helps us keep delivering reliable, straightforward information to retirees across the nation. Share this video with friends or family members who might benefit from these updates. Leave any questions or thoughts in the comments section below, and we look forward to seeing you in the next video. Stay safe, stay informed, and have a wonderful month ahead.